Welcome to Coffee Cafe. Again, I gave you guys a brief introduction of what Coffee Cafe is. It is our class project that we are going to be using to apply everything that we learned from chapters 1 all the way through 12, because chapter 13 is going to be teaching you how to close the books. Okay, we're not there yet, but I am going to start introducing a little more intricate concepts in here. So we are going to be looking at Step 4, which is posting to the ledger. Step 5, which is doing a trial balance. Now, as I've mentioned before, I already told you guys about the layout and what I'm going to be doing. So just a reminder, again, we will be using Excel, and every single step of the way I'll be asking you guys questions. And when you guys answer that questions, and that's what is going to make our informed decision whether we are going to choose to record or not. So again, if you need a reference point, okay, we have, again, the calendar of the events that's going to happen. So here we're saying that we're going to officially buy our company as of the June 3rd, okay? We're going to get the business. Now we need to set up the business. We can't just open up a business right away because we need materials. We need to set up our fictitious business, right? We need the necessary equipment. If we need to hire people, we need to hire employees, okay? So again, we won't start actually our operations until the 17th of June, which is Monday, as you can see right here. Monday is going to be our official open date. So this one, realistically, of course, that's impossible. But in this case, right, we're just going to do this so then you guys can kind of get the idea of what are the necessary steps that you need to take in order for you to open up a business. And this is it, right? We'll give you a quick overview of what 1 month is going to look like. So that's the calendar there. And I've also provided you guys the chart of accounts. So here, this is everything that you need in order for you to manage the transaction and find a way to place it into their accounts. Now, rule of thumb here is you need to have a copy of your accounting model, right? Because again, when we practice making the decisions, right, what justifies how our journal should be journalized, right, is by using the accounting model, okay? And also the 7 steps of transaction analysis, where we got to collect the source document. We got to see what accounts they affect. How are you going to use a debit and credit system to ensure which accounts are increasing and decreasing, okay? So that's that there, and here is the journal. And once again, how I'm going to teach you this is because I feel like this is the most effective and efficient way when we complete our journal, right, after our transaction. After every single transaction that we put into our journal, I'm going to have you guys post it to the ledger immediately, okay? This is one to also give you some preventative measures, but it also saves you some time, because if I wait till the end of the month or the end of the week to go ahead and put it into my ledger, the most important account that we need to look after the most is going to be our bank account. And if our bank account is going to be adjusted at the end of the week, right, we will lose lots of opportunities for us to, what if I write out a faulty check? So the best way to do it is at the end of every single transaction, so we know what our account balances are at the end of every single transaction. And of course, that's also going to give us a guidance of how I actually use my general ledger, okay? So here, right, I already gave you an introduction to Coffee Cafe, right? Mr. Bob Mason is a fellow man that wants to open up a small coffee shop in his neighborhood, all right? We already went over this, and he asked you to partake in his adventures to kind of train yourself and volunteer yourself as a person to get the accounting and bookkeeping experience, okay? So with that, right, here's one thing that you need to know is Bob has $30,000 that he wants to invest into his company, okay? So let's take a look at the very, very first one. So we're going to be setting up our chart of accounts and the general journal and the general ledger accounts, which I've already done for you. right? I've already provided you the general journal. I provided you the general ledger, and I even provided you the chart of accounts. Okay? So step 1 is done, right? So on Friday, May 31st, okay, Bob's friend, okay, from the bank tells Bob about this small local business that actually went bankrupt. So now, because they're filing for bankruptcy, right, it's currently being short sold on the market, okay? So he's basically giving you a tip saying, hey, you said you wanted, Bob, you wanted to open up a coffee shop. Here, a small local coffee shop just filed for bankruptcy and is currently being short sold. So that means they're trying to liquidate their assets and maybe they're looking for someone to just, take over the coffee shop. So with that being said, the company is worth this much, right? The company has furniture worth $4,000. Okay, so these are all it's appraised. Okay, this isn't their market. This isn't what's on their books. These are all fair market value. It's already been appraised. So this is what's going on in this company. So they have $4,000 worth of furniture. They have a coffee brewer that's worth $1,900, and they have a business name which is worth $2,100. So that in this case, if we buy this company, right, that is called again a copyright or trademark. We'll call this company name a trademark. So they have value to the company. So this company is worth overall in assets of $8,000. Okay. And guess what Bob does? He buys it. Okay? All right? So, given with this information, right, we end up acquiring a business, right? We purchased it for $8,000 because that's what its fair market value is right now. We're going to buy it for $8,000, okay? We're not going to buy it more or under. We're just going to buy it for $8,000, okay? So, now that we have this, our business, what do we do with this business? Can we and should we journalize this transaction? That's the first question. Yes or no?
Yes.
Why?
We just bought it.
We just bought it, okay? All right. That's your justification that we just bought it, which is that a business or a personal transaction?
Business?
Okay. Now let me ask you this. Has Bob established his business yet?
No.
So this would technically be a personal transaction, wouldn't it? Because he doesn't even have a business to begin with. He just has the business idea and he needs to start somewhere. So he bought a business, but is he allowed to do business?
No.
No. Okay. Why? Well, first off, he needs to have a license and permit in order to run a business. So in this case, this is considered a personal purchase. Second thing too is what accounting rule should be put into place here to separate your personal and your business? What do you need to have in order for you to make that association that this is a business transaction versus a personal transaction?
A credit card for the business,
Not a credit card.
checking account?
You need a separate bank account. In this case, we haven't even created a bank account for my business yet. So, can I record this transaction?
Just not?
Not yet. Okay? You will eventually do it, right? But right now, you can't because you don't have the necessary resources or necessary things that can allow you to be able to successfully journalize this transaction. So in this case, no. But we do need to keep in mind that you did buy the business as of May 31st. Okay? So then, of course, because of that idea, like we just said, right, we need to buy a permit to buy the business. So what did we do? On June 3rd, we decided to apply for a DBA name, right? DBA stands for doing business as, okay? And of course, that cost you $25 because this time I want to change the name. I don't want to keep it to whatever this previous business was. I want to make a business name change. So then when I do apply for my actual business, I can put what the name was approved of. So in this case, I'm changing my name and it cost me $25. So again, is this something I can record?
Yes?
Yeah.
No, not yet, because we still haven't opened up our bank account, right? But that's something that we keep in mind, that we paid money to change the name, right? So then the very next day, June 4th, we end up applying for a Nevada state business license as well as the city business license as well, right? Which end up costing me $250 to apply, as well as the city was $100. So in this case, here is the little my little application of the information that I posted on here. So here I posted that the name is going to be Coffee Cafe, right? The date that we applied was going to be the June 4th, okay? We're going to apply it as a sole proprietor, okay? And of course, who's the owner? It's going to be Bob, okay? And then of course, here's Bob's information. Again, his address and his phone number, all that jazz, okay? All right, so that is his business. So after applying, right, does that mean we got approved right away? No, right? You just simply applied. So again, we also have to wait for our business license to arrive into our company for us to be able to run our business. Okay. All right, so that was just that right there. So we spent $350, okay, on a business license, okay? But, however, we cannot record it yet, okay? So then, ooh, hold on. Okay, so then after we applied for our business license, state and county or city here, then that very same day, we decided to finally open up our business bank account. Okay, so business checking account, okay, for the Bank of Nevada. Okay, so this is what we need to put in because obviously when we acquire our business, right, we need to put some investment money in there, right? Because Bob has $30,000 to invest in his company. Okay? So here are the things that we need to recognize because now we need to backtrack because now I don't have $30,000 anymore, right? I had to buy the business for $8,000. I also had to buy licenses for $350 plus the $25 cost, right? And then I'm going to break down my business because, again, my business consisted of other assets, okay? So the very, very first thing I got to do is I got to recognize all of those expenses that I've already created, and I'm also going to put in the rest of my money into my bank account because I'm not going to be carrying $21,000 in my pocket, okay? So in this case, that's exactly what we're going to do. We're going to properly journalize it exactly like this, right? We're going to add our money to the bank. We're going to recognize we acquired $4,000 worth of furniture. We also acquired a coffee brewer for $1,900. We also got goodwill, right? We bought the business name for $2,100, right? And of course, we had to purchase license and permit expense, okay, for $375, okay? And last but not least, What was my total original investment that I had for my company? I started out the company with $30,000, okay? These are just transactions that we happen to have before June 4th, okay? So with that being said, right, let's take a look at my business chart of accounts. Since this does affect my business because I created a bank account, I need to adjust my bank account accordingly to say, well, I spent all this money for a business transaction. So in this case, let's take a look. What number is my checking account? Okay. Here, my chart of accounts. Now, here's how my chart of accounts is organized. So if you remember way back when in chapter 2, I talked about having the accounts, right? They're usually organized by account type, but how we further organize our accounts is by using main accounts, sub accounts, and contra accounts, okay? In this case, right, my main accounts, I decided to use capital letters, so they're all caps, and anything that is below it is going to be a sub account, okay? And then we'll talk about contra accounts later on, okay? Now in this case, right, let's take a look. What account number is my checking account? Do I have it listed in my chart of accounts?
Yes, it's 10100.
Good, right? Do I have a furniture account?
Yes.
Yes, you do. 13,000. What about a coffee brewer account?
Yes.
Yes, you do, right? You have the coffee brewer 1510. Okay? 1510. And do I actually have goodwill?
Yes.
Good, right? I have 19,100 for goodwill. And then let's see, do I actually have something, do I have any expenses that's remotely to what a permit expense is going to be? Yes, I do, right here. 6,600 is my license and permit expense. And last but not least, do I have a owner's equity account?
Yes.
Yes, you do. Good. So therefore, my chart of accounts has every single account. Now, how do each one affect it, right? We got to use our business accounting model, right? How does each one affect my accounts? Well, first off, I'm increasing my cash flow, right? I'm increasing my checking account because I'm putting money into my checking account. So therefore, if I'm increasing my assets, that's a debit, okay? And of course, I bought furniture, right? I acquired furniture. I had to spend money to get it, but that's not the question I'm asking because I'm already less than $30,000. So I acquired furniture for $4,000. So that's an increase in my assets. That's a debit. I also purchased equipment, which is the brewer. So in this case, perfect. I acquired an asset, so increase in asset. So therefore, $1,900. And of course, I also acquired a business name, which is Goodwill. So in this case, that also increased because it's an intangible asset, right? It's me buying intellectual property. Okay, so there you go. I increased my assets by 2,100. Okay. Now let's talk about the expense. Did I spend money for the business? Yes, I did. I had to buy a business permit and license, and this is what it cost me. A total of $375. Okay? So that's because I had to spend money How do you increase your expenses? By using a debit. Okay? And then the last question here is, well, what about my equity account? My equity account is $30,000. Now, let's think about it. When I invested money into my company, is that me increasing my equity or is that me decreasing my equity?
Increase,
Was that decrease or increase? I didn't hear that.
decrease.
Why would you decrease your equity if you are adding $30,000 value to it? Because right now, my equity account is at 0 right now. But because I'm investing my own money into the company, right? Am I adding value or am I decreasing value?
Adding,
You're adding, right? And how do you increase equity? With a credit, okay? So let's go ahead and properly go to our journal. So now that we know that we have all the accounts and we figure out how we justify our debits and credit system, now we got to journalize it. So step 3 of the accounting cycle here, let's properly journalize our journal transaction. What is today's date? In Coffee Cafe, what is today's date? What day did I actually open my bank account?
May 31st,
That is you acquiring your business, but I'm talking about when did I open my bank account?
June 4th.
June 4th, right? Today is Tuesday, June 4th. So that's the date I'm going to be using is June 4th, okay? So since I know that my checking account, these are the accounts I'm going to be using, so checking, right, which we saw in our chart of accounts, was account number 10100. Okay? And here it says that I deposited $21,625. Okay? $21,625. Okay? So however you like to have your cells formatted is whatever you want. I left it up to your discretion on how you like to see your numbers. In this case, I like to see them as numbers with decimal places. I don't like having I don't like an accounting style where you have the dollar sign on there. So as long as you could see the 21,625 with that. So I like to use comma style if that's which is one of this. So right here, comma style, which is going to give me the commas, and it's also going to give me the decimal points, okay? All right, so that's how much I'm putting in my checking. I bought furniture, right? I didn't specify what the furniture is because I'm going to tell you this. I don't like the furniture. I'm going to sell it out to someone else because I just don't like the furniture. So in this place, I don't care to even recognize what this furniture is, what I actually bought. Okay? So in this case, this account under my chart of accounts is furniture, which is going to be account number 13,000. Okay? So 13,000. And how much did I purchase it for? $4,000. Okay. I also bought a coffee brewer, right? We bought a coffee brewer. Right? Which this was account number coffee brewer, which is account number 15010. And how much did I acquire this coffee brewer for? $1,900. And then we also had Goodwill. Goodwill was account number 19100. Okay. Okay. And then we acquired it for $21,000. And of course, we made some license and permit expense. Okay. In your journal, I want you to put in as much details as you'd like, okay? Do you want to use abbreviation? You can. It's not wrong. But just make sure that the account numbers are correct, okay? But in this case, I am not going to take any shortcuts. I'm going to write everything out full on, okay? Because there are other shortcuts that you can use to save you extra time in your journal, okay? So license and permit expense, what account number is that? That is account number 6600. Okay, for $375. And then last but not least, we have a credit account. It's going to be for the owner's equity. Okay, which is account number 30,000. And it should be equal to the total number of your credits here. So if you want to, you could put 30,000, or the easiest way, so then I don't have to, check to make sure my total debits equal my total credits, is I'm just going to go ahead and do my equal sum right here in my column here to ensure, does my total debits equal my total credits? So in this case, I'm going to highlight all of my debits, and it gave me a total of $30,000. So right there, I don't need a test to make sure that my debits and credits match, because already right here, I did my formula and my total credits is $30,000, which is intended. Okay, so there you go. I finished my journal. Now I need to put a description. So again, your description can be whatever you would like. Okay, so in this case, I'm going to say, well, I opened bank account. Okay, I purchased business for $8,000 on May 1st or 31st, okay? And I had to pay Nevada license for $250. And I had to pay city permit for $100. And I also had to pay court cost, right? To change the name for $25, right? And there you go. So there you go. That's my perfect description. So as you could put as much details as you like, or you can put less details. And if you really don't want to, because this is your book, you don't even need to have it, okay? Because no one's going to be looking at this except for you. Now, are you going to remember it when we reach the end of the month and I tell you what happened on the very first, what was your very first transaction, and you open to it? Would you know what happened? You can slightly kind of understand by looking at the accounts that you used. But at the end of the day, are you going to be able to tell you that I bought a business and this is how much it was? Okay. So again, are you able to tell what those licenses were? Okay. So in this case, the more details, the better that not only you understand it, but again, if someone else is looking into your books, they're not going to know how much each license going to cost you. They don't know. They're just going to know it's a grand total of $375. Okay. So there you go. My description's in parentheses. All right. And I am done with this journal. Okay. So now that I've finished my journal, okay, so it doesn't have to match whatever I wrote in here. This is just an example. So in this case, I added a little extra detail. Now, this is where I was going to tell you, after you post to your journal, instead of waiting to the end of the week to post it to your ledger, I want you to do it at the end of every single transaction. So therefore, I'm going to grab my ledger, okay? Here's my ledger. I like to put it side by side because what you're going to be doing is anything that you put in the journal is going to reflect exactly on your ledger. Okay? And we're going to go through each account one at a time because, again, we're looking at account balances, not just regular accounts. Okay? So in this case, the first one I have here is my checking account. Checking is an asset, right? It's my cash, it's my money, right? Or I'm pretending I'm Bob. In this case, that's what I'm saying. The checking is something that I own, okay? So in this case, we're going to go to assets, and this is going to be in order exactly the way your chart of accounts is. So there are many ways that you can use this to look up your accounts. You can either look them up by an account name, or on the right side here, we have the account numbers right there. So any way that you want to search for it. You can even use the Control F key function to find what you're looking for in your Excel, right? The Control F function is going to allow you to search anything in your ledger. You can do that if you like, but in this case, we only have so many accounts, and we're not going to go over through many. So in this case, I am just going to scroll through. Usually I find that best just because we don't have like a million accounts that require us to have to look it up. Okay? So in this case, right, if I go to my assets, the very first thing is my bank account, right? And then of course, my checking is underneath it. So again, bank is my main account. Underneath that comprises my bank is going to be my checking account. Okay? So that means the very first thing here is on June 4th, right, which is the day that I had this transaction, I opened up my bank account. So I can say open bank account. Okay? My post reference is going to refer on what page you have in the journal. Okay? Not reposting the account number, right? You already have the account number listed here. Why would you put the account number in this section as well? That makes no sense because you're already in this correct account. So this right here is to refer to where this transaction happened on your journal. That way, when you need to go back to your journal for any reason that something doesn't look right, you look at where this transaction is, the date, and that way you can quickly find your journal transaction that way. All right. Now, where are these journal pages? At the top of every single journal, you have the page number here. So this is page 1 out of 25 pages. Okay, so you have a bunch of them. Okay. So in this case, we're on page 1 of the journal. So how would I refer or make a reference point? Okay, I would put GJ for general journal. Okay, and I would just put the number 1. So you're referring to general journal, page 1. Okay, now exactly how you have it in your journal is going to be what you have in your ledger. So in this case, I debited my account, right, by 21,625. Okay, 21,625. Okay. Format it how you like to format it. Again, it's up to you what you want to do. So what I like to do is I like to go down to the very bottom of this table, right? Try to highlight as much as I can. And I'm going to format this to be comma style because I don't like to see too many dollar signs because you can mistake a dollar sign as, a 5 or something. So in this case, now that I have this, right, what's the next column going to reflect? Okay, if I started with 0 and I started to debit my account by $21,625, right, what is that going to yield me a debit balance or a credit balance? If I started with 0,
Credit.
not credit. Why would it yield you a credit if you debited your account? Okay, if you started with 0, right? And you debit your account for $2,625. What does a debit do? Does it increase or decrease an account for assets? It increases, so that means it's going to increase to $2,625 in your checking account. So that means this is us creating our running balance. Now, of course, since it's the first transaction and the first thing that we put in our ledger, right, it's usually going to be reflecting of whatever you entered in there first, okay? And then when we start progressing and going on to other transactions, that's where I will show you how you're going to use to add the numbers together and what you're going to do to subtract the numbers, okay? All right, so in this case, I have $21,625 in my checking account, right? So then that's just my checking account. Now I need to go through every single account that I used to create an account balance. So the next one is furniture. So I got to locate my furniture. So in this case, I'm going to scroll. Furniture should be after inventory. Okay. All right. Here it is, furniture. Furniture is my main account. So what I'm going to say here is on June 4th, right? Because I journalized it as of June 4th. But what I can do is say is purchased on May 31st. Okay? Post reference, journal number 1. Okay? And how much did I buy the furniture for? Well, it increased my account on the debit side by $4,000. So what I'm going to do here is, once again, I'm just going to format this to be comma style so I can see all those zeros, okay? And because I increased, if I started my account with 0 and I increased it with a debit by $4,000, then I have a total $4,000 debit balance in my furniture account. Okay? So then now, the next thing I gotta do is, the next account I see here on the list is coffee brewer, okay? So it's very, very important that you do go in order, okay? Especially when we come across where we're journalizing and we're putting multiple accounts in multiple things, right? If you skip over it, right, chances are you will forget to go back to it. Okay, so best rule of thumb as a beginner is to make sure you don't skip over anything and you don't forget to do it. Put it in the exact order that it comes into your journal. So in this case, right after furniture is coffee brewer. So coffee brewer is going to be considered an office, not an office equipment. It's considered a regular equipment to the business. Okay. Here it is, equipment. There it is, coffee brewer. So in this case, it is June 4th, and you could say purchased on May 31st, coffee brewer number 1. Okay? Because I'll give you a hint. Yes, we will be making more purchases of different coffee brewers. So I'm going to call this coffee brewer number 1. Right? And in this case, post reference, once again, is still general journal number 1. And this time I increased my asset by $1,900 because I bought the coffee brewer for $1,900. Okay. So then that will also increase my coffee brewer account by $1,900. Okay. Next we have on the list is goodwill. Okay. Goodwill is an intangible asset, as we talked about it. There it is, goodwill. Okay. And it's still June 4th. So again, you could say, well, what is this goodwill? This goodwill is the business name purchased on May 31st. Okay. General journal, once again, is the first general journal. And because it was an acquired of an intangible asset, right, that's going to increase my asset by $2,100. And again, this will increase your account on the debit side by $2,100. Okay. Last but not least, I have a license and permit expense. That is an expense account. Right now, we are currently in our assets. So therefore, I'm going to scroll because I need to be in the correct section. So again, this ledger is separated by your account types. So in this case, this is an operating expense. So that's, I go to an operating expense. And in this case, the better hint for this one is everything is in alphabetical order. So license and permit expense is going to be in the L's. Okay, here you go. License and permit expense. Right? It is June 4th. And we got the permit on, we got the Nevada license. Okay. For $250. Right? We got the city license for $100. Okay. Which we purchased on the 4th. On June 4th. And court cost to be $25 that we spent on June 1st. Okay. Post reference for this, once again, we did this on our very first general journal. And because we had to spend the money for the operations of our business, that cost me, will increase my debit side by $375. Okay. And here, right, once again, I listed out all of those values to let me know that my license cost me $250, my city cost me $100, and the court cost me $25 to give me a justification of why my total is $375. Right? Right? Everybody good with me so far?
Yes.
Last thing on my list here is owner's equity. So once again, that's an equity account. All right, because we had an original investment, right? Money that Bob decided to invest into his company. Therefore, that is money that's going to hold value to your company, right? Again, if you think about it, your total assets is going to equal your liabilities plus your equity. I haven't borrowed any money yet, but I did acquire a bunch of assets. So that means my total assets right now is equal to the value of my company. So in this case, that's exactly what we did. So owner's equity, okay, it is June 4th. And in this case, I'm going to say this was an original investment. Original investment. Okay. All right. And again, general journal number 1. And we paid $30,000 to invest into coffee cafe. Okay? So therefore, because I put it on my credit side, because this is going to increase my equity by $30,000, right? We increased it, right? So therefore, in this case, my net balance is going to be on the credit side, okay, for $30,000. All right. So now that we are done with my ledger, because I finished my journal, I transferred and posted to my ledger. Now I'm going to go ahead and say I am done with this transaction. Okay, and that's what I want you to do. Now, again, if you're the regular accountant, you can hold off posting to the ledger till the very end. But in this case, I think the most important is keeping a good record of your checking account. Well, if you're going to keep a good track record of your checking account, why not do the other accounts as you go as well? Okay? So, there you go. All right? So now that we finished our very first transaction, we posted to the ledger. Now, let's go ahead and see what has happened next. Okay? Then you end up applying for a line of credit from Maine Bank of Nevada. So in this case, right, is this a business transaction we need to record?
No.
Why not? Why wouldn't you record this?
He didn't get any money yet.
Okay, you didn't get any money yet because all you did was simply apply. Do you know how much you're going to get? No, we don't even know how much we applied for because that's the rule, right? Same thing when you apply for a credit card, right? They approve based on your credit score, saying how much you're capable or allowed to be able to afford when it comes to borrowing money. In this case, we just simply applied for a credit line from from the Bank of here of Nevada, but at the end of the day, one, it's not approved yet. Two, we don't even know how much we're going to be approved for. So in this case, no transaction necessary. Okay. All right, so then now it is the same day. Okay, we decided to also end up going out and selling our furniture for $2,000 cash. Okay, and of course, we're going to also request for a new account record, right? And this new account record is going to be loss on disposal of asset. Okay, but in this case, we already have the loss on disposal of asset. Okay, so in this case, this is what my journal should look like, right? I originally acquired my furniture for $4,000, but we realistically know that if you end up selling used furniture, the chances of you actually getting a gain out of it is very unlikely, right? Because it's already been used. People are not going to buy it for the price that you want to sell it for. So in this case, we're going to have to end up taking a loss. But at the end of the day, we end up getting cash out of it. Okay? Now in this case, because I end up gaining money, all right, so even though I end up getting money, right, I still have to assume that because I only got $2,000 out of this furniture. But how much was my furniture actually worth when I originally bought it? It was worth $4,000. So in this case, I definitely for sure lost money out of it because I sold it for less than what it's worth. So in this case, I have to recognize that I end up getting a loss. Now, of course, this loss is going to be considered an expense to the company because, again, I spend $4,000 to acquire the asset and I end up only getting $2,000 back. So in this case, it becomes an expense. Okay. Now, what do I do with this $2,000? I sold it for cash. What am I going to do with this cash? Let's take a look at my chart of accounts. Do I have a cash account? Do I have a cash account? Okay. But did we remember the rules of petty cash? Can I just use that to just dump my loose change in there? No.
About the checker.
Checking. Okay. So that means that requires us to deposit money. Okay. Good. Right? Because I don't have a cash on hand account. I have a cash in register, but did we even buy a register to begin with? No, we don't have a cash register to begin with. So I can't put cash in a register if I don't even have a cash register. So this idea here, our only place that we can put it is in our checking account. So we're going to make a deposit. Okay? And of course, we're going to recognize our $2,000 loss. And because we sold out all of our furniture, right? Because I don't want to use an old coffee shop's furniture. What if it doesn't match my color scheme that I want to make my coffee shop look like, right? So in this case, I'm going to get rid of all of it. And I'm going to write off that I sold out all $4,000 worth of my furniture. I got rid of all of it. So there you go, chart of accounts. We have my checking account. Now, I already have my furniture account. It was $13,000. Now, do I actually have an account called loss on disposal of asset? Yes, you do. You have it for $6,700. Right? So now let's go ahead and journalize our transactions here because now we know exactly what we have to do. So June 4th, right? We end up selling our furniture and we received cash out of it. So in this case, we got our checking account. Okay? We also have to recognize, right? So we increase our cash flow, right? Because we got money out of it. So therefore, we increase our cash. Okay? Second thing is, well, in this case, we had to recognize our expense. So loss on disposal of asset because we end up selling it and we end up selling it for less. Okay, so checking was 10,100. This was 6,700. And then, of course, because we got rid of our furniture, we're going to go ahead and decrease our furniture account because we no longer have our furniture anymore. So therefore, I need to credit my furniture because I'm not increasing my assets, I'm decreasing, right? Because I end up getting rid of my furniture. And I do that by crediting it because I got rid of it. I'm decreasing my furniture. So in this case, it is for 13,000 is the account number. So again, I gained $2,000. I lost $2,000. And this should be equaling, right? You could use your formula here. It should equal to $4,000 credit. Okay. Okay. Last thing I need to do here is pretty much say that loss on sale of furniture. Simple, right? Nothing else that you really need to say here just because you just lost money for selling furniture. Straightforward. Okay. So now that I have this, right, I need to go ahead and update my ledger. Okay. So here's my ledger. I'm going to go to the first thing on my list here is my checking account. Now, question to you. since I'm putting $2,000 into the checking account, is it actually really in there? Is the $2,000 actually in my checking account if I say I'm going to put in my checking account?
Yeah.
Okay, so if I received a check, right, for $2,000 and I received it, right, and I'm at home, can I say I have $2,000 in my checking account? No. You have to go to the bank and actually make a deposit. So that's just something I wanted to make sure that you understand. Everything that we're doing here, it's physical, right? But in this case, I actually have to go to the bank and deposit the money. So in this case, this isn't truly reflecting your real amount of cash that you actually have because you have to go physically to the bank to actually deposit it. And that's what we're going to do after this. So now I'm going to say this is the money that I earned from sale on furniture. Okay. So again, we are still on the first journal and I've increased, right? Because I debited my account by $2,000, right? So this is where the running balance is going to come into play. Okay. So this is what I'm going to do. This is the formula in Excel, but think about it in real life, right? I start my account balance with $21,625, right? If I go ahead and deposit $2,000, right? What should my bank account reflect? What should be my balance right now? How much should be my bank account right now? 23,625. Just exactly what you said, right? That's the same exact concept here. Except this time, right, we're going to apply accounting terminology, right? I debited my account for $2,000. So therefore, it should increase my checking account because I debited my account. Now, if I write a check and I spend the money, right, what is that going to do to your checking account? If I use a credit in my checking account, what does that tell me? It's going to decrease. So this is where the formula is going to come into play. So this is, when I use Excel, I'm going to use equal to get my formula started. I'm going to click one up. So the previous balance of $21,625. I'm going to add any debit. So in this case, I'm going to add $2,000, right? But just so then I don't have to do this every single time, I'm going to also subtract my total credit. So in this case, I have 0 credits here. Okay? So again, you're going to take your previous amount of $21,625, you're going to add 2,000, and you're going to subtract this blank one right here for the credit. Okay? And when you press enter, should give you a running balance. Now check this out. Okay? If I drag this formula all the way down, this is going to give me my running balance. So that means every time, let's say, I end up gaining another $5,000, right? If I type in $5,000 on my debit side, it will automatically calculate by adding it together. If I decide to cut a check for $1,500, it's going to automatically calculate that number for me. So in this case, this is going to help you make your punching the calculator errors, okay? By a whole lot if you use Excel, because Excel is it's very straightforward. You tell Excel what to do for you, okay? So in this case, I'm going to erase that because we don't have that. But this is going to, that means every single time I enter in a transaction, it will automatically calculate for me. And all I have to do is just drag this formula all the way down to the bottom of my table, okay? In this case, I'm just going to keep it up to here just because I'm also going to be asking you what is your account balance, because again, that's where we can also match our books with each other to make sure did you put it on the correct side. Okay? So in this case, we increased our checking account by $2,000 to give us a total of $23,625. Okay? So that's how we do account balances. And every single one of these accounts, you're going to also apply that same exact formula. Now, that formula will change if you're looking at a credit, okay? Because a credit is going to be different, right? You're going to be adding your credits and subtracting your debits, okay? And we'll take a look at the example once we hit into, liabilities and things like that, okay? But for now, the formula is going to be up 1, left 2, minus left 1, okay? All right, or previous balance of 21,625, and because I'm self-referencing it, I'm not typing in the numbers, okay? Then when I drag the formula down, because it's using relative cell referencing, that means it's going to carry the values as you go down the rows, okay? So there you go. So there's my first one, which is 23,000 for my checking, okay? Now, if you want to, you can go ahead and do every single one for every single account that we have in your assets. But let me warn you, we may or may not use every single account in here. So don't waste your time doing that. Only do the ones that we actually do in class, okay? Or if you want to, practice that formula, go ahead, knock yourself out, okay? All right, so the next one, right, we have is loss on disposal of asset. So once again, go in order. Do not skip loss on sale of asset and go straight to furniture, because most likely occasions, right, you might get sidetracked, you might get lost in your transactions, all right? Or maybe you're just going to go forward to furniture and then you're just going to go straight into something else, right? You can easily forget. So in this case, that's exactly what I'm going to do. I'm going to go to loss to sale of disposal of furniture, disposal of asset first, and then go back to my furniture, okay? Rule of thumb for beginner bookkeepers, you should do that so you don't miss out on an account, because that is why when we do our trial balances, that's where you're going to get a lot of holes in your balances because you forgot and you skipped over it and therefore you didn't record it. Okay? So again, loss on disposal of assets going to be in alphabetical order. So here's license. There it is, loss on disposal of asset. So again, today's June 4th. Loss, right? And then you could say sold furniture for $2,000 cash. And loss $2,000 from sale. Okay. All right. We are still on general journal number 1. And because we have to take the loss because it's part of the expense, right? We spent $4,000, but we end up only getting $2,000 back. Therefore, we're going to record this as a debit loss, right? This was the $2,000 we spent for the business that we got nothing out of, right? Right? And of course, I'm going to format this to comma style, right? And because I debited my account, this is the first account, then it's going to reflect as $2,000 loss. Okay? All right, now that I have that, I'm going to go ahead and proceed with the next one, which is furniture. Okay. So furniture is an asset. Okay, furniture should be right here. Furniture. Okay. It is June 4th, and this time what I'm going to say is I sold sold furniture. Okay. Spelling doesn't matter in this, of course, but again, more details to your notes will be better. Okay. And because I sold the furniture, right, I end up getting rid of the asset. Therefore, it's no longer on my books. So therefore, in order for me to get rid of it, or I have to decrease the account. And I'm going to decrease it by a credit of $4,000. Okay? Now, in this case, because I decreased my account, this is the formula, right? We're going to practice the formula one more time. Because of that, right, we're going to take our previous balance of $4,000, right? We're going to add nothing in that row because I did not increase my account. However, I do need to subtract out my 4,000 because in this case, I'm decreasing my account. And if I press enter, it should calculate that I have a zero balance in that one. So in this case, because I'm using accounting style, or in this case, I'm using comma style, it's going to show up as a dash. Now, if you do accounting style, it will also appear as a dash too, okay, with the dollar sign on it. Okay? So that's zero because there's nothing in there, right? So what this did was it took $4,000 and it subtracted the 4,000 to get you your account balance of zero, right? Good. Any questions so far? No? No questions?
All I can say is, you just opened a business and you already have a loss for $2,000. That's pretty bad.
Well, in this case, we still have money. It's not like we're taking a huge loss. But yes, that is true because I mean, in this case, right? Again, think about it. If you're a real business, right? I don't need this furniture. This furniture is going to be, it's just a waste of space. So I need to get rid of it. And if I can get some kind of value out of it, $2,000 is way better than getting zero out of it and just disposing it in the trash, right? At least you got some kind of dollar value out of it. And this is only a $2,000 loss. It's not that big or that major compared to like corporations who actually have to write off their bad debt, right? In this case, it's the part of doing business, and especially because, yes, right? I sold my furniture because I didn't want used furniture. I want brand new furniture. So in this case, I accepted it, and I say I took a loss. Okay? Any questions?